Chalet hotels, that's an interesting one to watch out for. Strong moves in terms of opening, though the stock has cooled off right now, seeing gains of nearly 4.5–5% as we speak. The profits have doubled, margins have been pretty good this time around, and this is in spite of those geopolitical headwinds that we were talking about with regards to the hotel industry as a whole. To discuss more on this, let me get in Sanjay Sethi, MD and CEO of Chalet Hotels. Sanjay, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, overall, what have been the key drivers behind the significant growth that we've seen in terms of top line, operational efficiencies, as well as profitability? Because some portion, in fact, a substantial portion of the quarter's growth has come in from the residential project in Bangalore. So if you could provide a breakdown of the core hospitality business performance, specifically with regards to ARR, occupancy, and RevPAR.
Sure, Hiral, pleasure being back. Thank you so much. You're right. It was a quarter that was troubled by geopolitical tensions across the border. We also had compression on air seat capacities and disruption of flight routes. Despite that, I think the companies reported strong numbers. We believe that the strength in the numbers will continue for the foreseeable future. And when I say foreseeable future, I'm looking at least 3 to 4 years. I don't have visibility beyond that. To your question regarding a breakup on how we've done across various business segments, well, hospitality on its own grew by about 18% year on year for the quarter on the revenue side, and 20% on the EBITDA side. The annuity income, which is the office rental business, roughly doubled what we'd done last year, same time. And on the EBITDA side, we had 130% growth. The residential business, which was, it was inevitable for it to pop up in our P&L because this is a project that we rekindled about 1.5 years, 2 years back. And we've always said that this will sort of, it's a one-time thing. We're going to make money on this one. Let's complete and get, hand over the flats and get out. It's been a great project. We've now sold close to 300 of residential units. We have only 14 units left to sell from our kitty. And within those 300 units that we sent, the average ticket price, or average rate per square foot for the new sales has been north of 20,000 rupees per square foot very comfortably. We had expected this to be at about 13,500 2 years back. Yeah, so residential, so here's the thing, if you take residential out, which is a one-time impact over a few quarters, without residential, our revenue has grown by 27%. This is between hotel business and office business. Both of them are strategic initiatives at our end, will be continuing businesses. And our EBITDA has actually grown by 37% on those two businesses. Overall, very happy with the performance, and I see this only getting stronger from here onwards.
Mr. Sethi, hi, Mahima also joining in. I just want to understand, occupancy has come down a tad bit year-on-year basis. It was at 70% in Q1 FY25, but has come down to 66%. So the kind of revenue growth that overall you've seen in terms of hospitality business, from what my understanding is coming from the kind of average room rate, because that has seen a significant uptick of around 70%. Is that reading correct? And considering that occupancy was lower this particular quarter, and this is because of geopolitical reasons, what is the number in place, internal targets that you're seeing in terms of where occupancy will stand by the end of FY26?
Mahima, thank you. Look, this occupancy was dragged down for 2 reasons in this quarter. One, of course, the external issues which were out of our control. The other reason is that we added about 165 rooms in this quarter to our portfolio. And those rooms take time to fill up and drag the average occupancy down. If you were to normalize for that, the occupancy drop is only a couple of 100 basis points. It's not a big worrying number. And this despite the geopolitical situation that we are faced with. Going forward, whilst we don't share numbers, as I said earlier, I'm extremely confident that double-digit RevPAR growth is pretty much on the cards for the next few years.
Mr. Sethi, with regards to your pipeline updates, you've already given us that, but just want to get a sense because these updates we've we've had this in the past quarters as well. Want to understand if there's more to add to that pipeline, anything that you're looking forward to adding to that pipeline?
So today we have 3,300 odd rooms. We've got 1,200 rooms under various stages of planning approval or development on the site. That'll take us roughly to about 4,500 rooms. And I think I shared this earlier that my wish is to get to a 5,000 room inventory by the end of this financial year between pipeline and operating hotels. What we have visibility on, definitely in terms of opening, is 30 additional rooms in the Duke's Retreat, which will take our count there to 147 rooms. By the way, that resort's come out lovely. People should visit it. The feedback's fabulous. The rain's doing wonders for that resort, and we've got 5 waterfalls visible from the resort. Beyond that, we've got a big hotel in a development in Delhi, which is about 380 odd rooms. We've got 3 land parcels that we're working on, 2 in Goa, 1 in Airoli, Navi Mumbai, which at some point of time will start work and with shovels in the ground in the next 2 or 3 quarters. Overall, I'm very confident that by the last quarter of this year, we will have a pipeline plus operations of 5,000 plus rooms.
Okay. Sanjay, okay, so with all of the expansion plans that you have in place right now, what is the capital allocation strategy expected to look like going forward? Meaning in terms of balancing funding for new acquisitions, ongoing projects, and deleveraging. If you have to look at all aspects, what will that look like?
Sure. Over the last few quarters, our debt position, as you would have seen, the net debt position has been fairly flat. A little bit of movement over there, which means all the capex that we're doing right now is funded through internal accruals. As the office business and residential brings in cash flows, it will only get stronger. The hospitality division is already funding all the new hotel assets. What's being funded besides the hotel assets is the office business, which is literally also included in self-funding. We do expect debt to peak a little bit for the existing pipeline at around maybe 2,200, not beyond that. And that is also a high number as I see it. But within that, we'll be able to deliver everything that we've spoken about. And then the debt will fall very rapidly. Our debt cost of debt has also come down significantly. We've dropped 40 bips on the return of interest on a net debt basis. So we're very comfortable. We're an aggressive company on the growth side. We are an asset-based company. We believe there's value to be created out of this asset-based strategy. And I think our dual engine strategy of hotel assets complemented by office assets has worked very well and will continue to do extremely well.
Mr. Sethi, one trend that we've seen this particular year is that a lot of real estate companies that are owning hotels are separating their hotel business because there are different synergies available in both of these aspects. For you right now, though real estate business is very small, but just want to get a sense, is that something that you would look forward to doing, maybe separating your hotel business and real estate business if that grows at a larger scale?
So today our real estate business is only about 22% of the total business. And I think it'll continue to drop in its percentage because hotels are being built. There's no reason right now. The real estate business is giving very strong return on investments to us. The IRRs are north of 20%. But at some point of time, if we need the currency for a massive leap in acquiring a portfolio of hotels, this is a currency that we sit on. Right now, no visibility on such a transaction.
Okay, so no visibility on that front. Sanjay, let's talk about the leadership transition. You're not seeking an extension of your term. We have Shwetank Singh, who will be taking over as well. How is the transition plan stacking up to ensure smooth handover and continuity from the way Sanjay Sethi managed it to the way Shwetank Singh will manage it?
Great question, Hirul. Look, I'd actually sort of indicated that I'd like to step down from the executive role a little over 2 years back now. And we worked, between the board and I, we worked hard to identify the right person and also give him enough time to work alongside me, to sort of pick up the nuances of the strengths and opportunities for the business. At the same time, make sure that when he comes in with a fresh perspective and fresh energy levels. However, the basics of the business is not going to change dramatically. Shwetank comes with a very rich background on the hospitality asset management side and growth side. He did a lot of business development in the past too. But having spent 2 years with him, I think we are already settled very well. If I was to have given up this role today, we've got a leadership team besides Shwetank, not just Shwetank, to step in almost immediately.
Mr. Sethi, one last question from my side. This quarter has shown resilience because, we mentioned earlier also geopolitical reasons, despite of, them being under pressure, you've managed to grow both in terms of top line as well as bottom line. FY25, you ended with roughly 1,700 odd crores of top line. Considering the rate at which you're growing, do you think doubling of your revenues is possible by the end of FY26?
We don't give any forward-looking numbers, Mahima. I'm sorry about that. But look, I think the first quarter itself, even if you take residential out, 27% revenue growth, I think it's going to be in line with that. So I don't see the revenue doubling from 2025, but it will be a very healthy growth.
All right. So strong moves there and strong leaderships coming in as well. But thank you, Sanjay, so much for joining us on the show. Always a pleasure to speak to you.